When I evaluate properties to invest in, one of the main things I look at is the market, the geographical area of where the property is located. Now, there is not a right or wrong market, but there's different markets for different goals. Depends what you're wanting to achieve. So if you're looking for major appreciation, you want a lot of equity when you sell. So let's say you want to double the value of that property in 5 to 6 years or something like that. You're going to need to be in a very fast growing market. Right now, some of the fastest growing are in the Sunbelt, Florida, the Carolina, Texas is real hot right now. Some of the areas that used to be really hot, California, New York, a lot of people moved out of during COVID, so they're not as strong right now. But those are some great markets for accumulating lots of equity. However, they're costly to buy into. So you may not get the best purchase price, and that may hamper your cash flow. So if your goal is to have massive cash flow, and you're not so worried about the exit price, maybe you're holding for a long time, then you might be better off in secondary or tertiary markets within those growing states, or you may wish to go to another state that is stable. You generally don't want to be in markets where the population is decreasing because you could have property issues with vacancy. But if you are in a stable market, a lot of times the prices there are far more reasonable and you can cash flow really well. So don't let someone tell you there's a particular market you should or should not be investing in. It really is about your personal goals. Something else to think about is if you're buying residential properties is what the landlord, tenant, and business laws are in the particular state or city or county that you're investing in. You want to be in a landlord-friendly area if you're dealing with residents, right? If you're buying self-storage, that's not going to matter to you. So it depends on the type of asset you're buying. Again, it goes back to your personal goals and what you're looking for. But that is something else to consider with markets, how that state handles things like evictions, how long turnarounds have to be, if they have rent control, things like that, if you are dealing with residential. Again, other forms of commercial real estate are less impacted by those things. But just a few things to think about when you're picking the market to invest in. Remember, you do not need to invest in the market in which you live. In particular, if you're investing passively through somebody else via syndication or a fund, and I can help you find those if you need help with those. But in those cases, it's even that much less important that you are in the geographical area where the property is. So then you can just aim for whatever's going to best suit your goals. All right, happy investing.